Hi everyone, in this video we're going to be talking about the exact suburb that you can invest in Queensland in 2021 to literally make at least 10, 20, 30% capital gains in the next 1 or 2 years. Okay, so if that's what you want, then stick around right through to the end because this is going to be adding some pretty decent value to your property investing. So my name's PK and I help people build passive income through real estate by buying properties that have the combination of capital growth and positive cash flow using data without the need to drop $15,000 on a buyer's agent, without the need to spend hours and months doing research, and without the need to spend their weekends doing inspections or flying around the country. So let's get into it. Now, what I'm going to be talking about is not only the location, but also the reason why. That's really what you're interested in, guys. And if you get value out of my YouTube channel, if you get value out of my content, then absolutely destroy the subscribe button right now. Hit the notification bell, give this video a thumbs up on YouTube, and that way it will go to so many more people who need it. No one makes content like this. And if you're part of my Facebook group, there's over 7,000 people in there right now. Welcome. If you're part of it for a long time, great to have you here. Hit the like button, tag someone who's researching property that this will benefit. Let me know in the comments what you think. And if you're watching this video somewhere else, then head to my YouTube channel, head to my Facebook group, because there's a lot of value there. All right, so let's get into it. So this suburb is in Queensland. And I just want to make the point that for the last probably 5, 6, 7 years, every property investment expert in Australia has been touting Queensland as the next state to boom. Naturally, the logic is that once New South Wales booms, once Victoria booms, then Queensland is the next one to boom. Now, Queensland hasn't boomed in the last 5, 6, 7 years. And by the way, there are 25 million real estate experts in Australia, so completely ignore them. I'm just another one of them, dime a dozen. Don't even listen to my opinions, only follow the data. And I'm going to be talking about the data in this video right now. So a lot of people naturally, when they think Queensland, they naturally think Brisbane. They think that's the capital city, that's where the money to be made is. The reality is that in the last 10 years, even after the Sydney-Melbourne boom, which finished in 2017, Brisbane has grown by about 18%, right? So just because it's affordable, you guys, I know that you're listening to all those podcasts. I know you're listening to a few other channels on YouTube. I know that all these buyers agents who pay to come on those podcasts, I know all of them are saying that the affordability story in Brisbane, the fact that it's so much more affordable than Sydney, Melbourne, the fact that there's lots of infrastructure going into Brisbane, the fact that there's lots of interstate migration, the fact that yields are really good in places like Logan and Ipswich and Peachtree or other places like that. Those are all the fundamentals that they say that the reason that you should buy in Brisbane. And look, you don't need to spend 10,000 or 12,000 or 15,000 on a buyer's agent. I can tell you right now where they're investing in Brisbane. It's Woodridge, Logan Central, Logan Lee, Slacks Creek, North Ipswich, Ripley, Springfield Lakes, North Lakes, Mango Hill, Peachtree, Callinga, Kipper Ring, Deception Bay, Redcliffe. Like, this stuff isn't hard. I know that you spend so much time on podcasts trying to listen out for those clues on where you should invest. Like, there's the spoiler. You can go ahead and pay for a buyer's agent, but literally those are the areas. And I can tell you right now that we have not invested in a single one of those locations ever, right? None of my clients have done that because all those fundamentals that I mentioned, that's great. Those fundamentals are like getting, if you're building a skyscraper, it's like getting the earthworks done. Those areas have some good features, which is like getting a flat, level soil plane or foundation on which to build your building. But unless other things also stack up, unless other data points also stack up that provide you with your slab for your skyscraper, then building a skyscraper will be completely folly. Just having a flat piece of dirt is not going to allow you to build a skyscraper. Similarly, simply following the fundamentals, like where infrastructure is going in, or where interstate migration is going in, or where yields are great, or where there's affordability, this is completely different from all the other content that you're hearing. Those things in of themselves are great, but they are not providing you anything more than a flat piece of dirt. You also need the foundation, you also need the engineering, you need the structure, you need the steel, you need all these, in this analogy, data points to actually build a skyscraper, if that skyscraper was a property investment portfolio. So the suburb that I'm telling you today that will increase, and my reputation is on the line. I've done so many videos in the past where I've given you exact suburbs. Just 5 months ago, I did my Sydney video, which I do at the start of every year. If you haven't checked it out, check it out. All those suburbs have gone up at least 150k. If you haven't checked out my Melbourne one, go check that out, 5 months old. All those suburbs have gone up at least 100k. If you haven't checked out the one I did a year and a half ago in Sydney, all those suburbs have gone up at least 250k. Same with Brisbane, etc., etc. So I'm giving you a free suburb here, and it will go up. And the reason I can stake my reputation on the line is because it's really not my opinion. My opinion doesn't matter any more than your opinion. What I'm teaching you here is the data. So let's get into it. Let's not fluff around. You guys are just here for the suburb, right? And the reasons. So let's start with the reasons. Now, the suburb is in the Gold Coast, and so bear with me. A lot of people thought that leading up to the Commonwealth Games in 2018 that the Gold Coast would boom. The Gold Coast did not boom. Yes, it increased by about 15 or 20%. I'm going to give you the exact suburb in a second. It did increase, but it did not boom. In fact, some people now are saying that the Olympic Games are basically a shoo-in for Brisbane in 2032. So even if we get the short-term data right, in the long term, it'll come good. The reality is that whether it's the Commonwealth Games or the Olympic Games, those things counterintuitively don't actually have such a large impact on property prices as you may think. Okay, so give you two examples to back up that point. First example, the Olympic Games in year 2000 in Sydney, they were fantastic. They were probably my favorite Olympic Games. I was only 11 years old, or 10 or 11 years old at the time, and like, it was great. You know, Kathy Freeman winning the 400 women's race, and it was a spectacle. You know, I don't think there has been an Olympic Games like that after that, but even still, Sydney property prices were completely dwarfed in capital growth leading up to those year 2000s Olympic Games to Melbourne property prices. So Melbourne didn't have the Olympic Games, right? But Melbourne property prices grew the 3 years leading up to the Olympic Games more so than Sydney. Okay, so like, if you think that Olympic Games equals huge capital growth, then that's not necessarily the case. Example two, Gold Coast. So Commonwealth Games, yes, there was a bit of a run up in property prices in Gold Coast leading up to 2018, but I can tell you right now that in the last year, especially in the last 6 months, Gold Coast property prices in many suburbs have risen way, way, way more than what they did leading up to the Commonwealth Games. And leading up to the Commonwealth Games, they had their light rail, they had so much infrastructure going in, but the fundamentals are alive now, not so much back then. So here's the suburb, and you can get this really, really wrong really, really easily, because in the Gold Coast, a lot of you guys are probably tempted by property investment firms to buy in places like Coomera or Pimpama or Mayo Heights or Mayo, all these areas that are between Brisbane and between the Gold Coast. The natural pitch being that, hey, in the future, these two cities will merge into one city, huge infrastructure, Bunnings, Westfield, population growth, all the rest of it. what these property investment companies, and they come in 1,000 different disguises, they get paid by the developer, that's why they're selling you these house and land packages. I don't want to mention any, but they're definitely not called the B or C team. Check the letter that starts before that. And many others. The reason that they're not growing and they won't grow, or they'll underperform other suburbs like the one that I'll tell you, is that there's so much land, right? In some of these areas, almost 60% of all these houses are actually investment properties. Competition between landlords does not push property prices up, especially when there aren't enough tenants to go around. Plus, there are acres and acres and hectares of further land that is available in those areas. So it just doesn't make sense. The supply story dwarfs the demand story. Therefore, supply and demand doesn't mean that prices grow. But I'm waffling on. Let me come back to the point. So the suburb that stacks up, and I'll share with you, stacks up for these reasons. A, it's in a part of the Gold Coast. Actually, it's not like 100 kilometers away from Pimpama, but this is my point. You need to be careful where you buy in any city. Don't just buy in Brisbane, don't just buy in Sydney, Gold Coast. You have to be specific, because some areas will underperform, some areas will boom. This area is sort of enveloped, and it has scarcity of supply, because on the right-hand side, there's the ocean, and on the left-hand side, there's various nature reserves, conservation parks, and mountains. So you can't develop those areas out. So supply is constricted. Building approvals, which is a good leading indicator of future supply, is very tight. So those two things are great. And now if we look at some of the data metrics, like the demand side metrics, and of course in the Property Investment Accelerator, we go into all of them in minute detail, but some of them, like looking at my computer, like days on market trends, like online search interest ratios, stock on market, vacancy rates, of course, are one that everyone knows. Discounting rates are very low. Auction clearance rates are very high. The renters, or percentage of renters in the area, in the suburb, is bang on. Like, basically, this suburb is perfect. The suburb is Highland Park. Okay, so check it out. Highland Park. We were investing here all throughout 2020. So whilst you guys, or many of you guys, probably very scared to invest in property if you're brand new because of COVID and everything like that, myself and my clients, we were buying tons of property in Highland Park and even Pacific Pines. You know, the data is strong, not just for Highland Park, but around Highland Park. And for those of you who are my clients and are thinking, PK, why are you giving away the suburb that we've bought in? We're not buying there anymore. It's grown too much. So the bottom of the market was late 2019. And at that point, we started to see that all of the stars were lining up. You know, like when you look at the night sky, you know, what makes it beautiful is not just one star or two stars or perhaps the half moon. What makes the night sky beautiful is when there's a carpet of stars shimmering, right? Like, that's really, you know, the campfire, you know, camping sort of stuff that you love to see. That is exactly what we want to see in suburbs as well. Each of those stars represents a data point. And when those data points are illuminated, they're not dull, but they're illuminated and they're lining up to form constellations. I don't know where I'm going with this analogy, but when they're lining up and they're all perfect, when the stars align, then we know that the suburb will grow. For sure it will grow. And so this suburb we were investing in all throughout 2020, and I think we probably stopped investing here about 2 months ago. The reason being, it's grown too much. It's grown more than 15 or 20%. Me and my clients, we never buy in areas that have grown more than 15 or 20% because we want to buy at the bottom of the market, not when all the buyers agents, all the herds have come in. But if you have a higher risk appetite and you still want another 10, 20, 30, 40% of growth, this is the suburb for you. We won't be buying this. You're not competing against us. And the reason it will grow is because all these data factors are basically perfect. All right, so that's really interesting and important for you to know. And here's a story. One of my clients, his name is Bennett. I hope you don't mind me shouting you out, Bennett. His interview is in my YouTube playlist. Check it out. So he was a recent migrant into Australia in 2019. He had used a buyer's agent before, nice fellow, maybe not the greatest buyer's agent, and he got him to invest in Ipswich. That property in Ipswich, credit where credit is due, has grown but it's grown by about 20 or 30 or $40,000. Okay, and so it's good, it's not great. Then Bennett decided, actually, I want better results. I can't pay $15,000 every time to build a portfolio. Bennett lives in Melbourne, and he followed my methods to get an off-market opportunity in Highland Park. This was in March or February, I think it was, this year. One day on a Wednesday, the property, the sales agent in which he built a relationship in just 3 weeks, called him, say that the vendor needs to sell tomorrow. They don't want to advertise. They don't want to, do all that stuff. They have some circumstances by which they really need to get rid of this property. Bennett, if you buy this tomorrow, it's yours. Bennett got his property manager in the Gold Coast, which I'd hooked him up with, in to see the property. Everything checked out. He bought it the next day. Like I said at the start of the video, you don't need to catch a flight. You don't need to just buy sight unseen, relying on the pictures alone. You can get these types of properties off market. You can get these properties under market value. He got it about $40,000 under market, positive cash flow. So when he bought the Suburb, or the property that he got was yielding 6.5%. So just get that, like he bought a $550,000 property, which, by the way, you don't need to spend that much if you want positive cash flow growth properties, but he spent $550 in this Suburb, and it's already worth well above 600, or I would even say 650. He hasn't got a valuation, but go on realestate.com, see what advertised prices are for properties in Highland Park. I can guarantee you're not finding anything in the 500s, and the good properties that you are finding are in the high 600s, close to 700s, or if not higher. Check it out, do that yourself, don't just take my word for it. But long story short, he got this positive cash flows property, 6.5% yield, that's going to give him at least $7,000 of passive income straight off the bat. It's already grown more than $50,000. He already got it about $50,000 under market value. He's got $100,000 of equity sitting there. I'm recording this in May, okay? So just connect with that point. This isn't really a sales pitch. I just really want you to understand what's possible if you do property investing really well. That's more than $100,000 of equity for a brand new property investor. He had no idea what to do before that in just 4 months, or 4 or 5 months, right? So Highland Park, at the bottom of the market, I'm looking at my computer, late 2019, December 2019, was $500,000. So you could buy a $500,000 property or thereabouts over a year ago. Now, my data set is saying that the average price is about $620 to $630. Now the data can be a month old, so realistically with the growth, it's probably around $650. Hence my comment that yes, you might be able to get some decent properties in the 600s, but really you're looking more towards 700 or beyond. The yield has come down now. It isn't 6.5% that Bennett got. The yield these days, I'm just looking at my computer, the data set. So this is still positive cash flow territory. This is above 5% yield, right? So people ask me, hey, PK, I live in Sydney, I live in Melbourne. It's really hard for me to buy properties because everything I buy is going to be $1 million plus. It's going to cost me $10,000, $20,000 to hold if I'm buying in places like Baulkham Hills or Campbelltown or Penrith. These are the more affordable areas in Sydney, not Baulkham Hills. You don't need to, just expand your horizon. If you found this video because you're trying to learn property investing and you're sitting in Melbourne or Sydney thinking, I've already got my principal place of residence and I want to start a portfolio, or I'm priced out of my principal place of residence, I want to start a portfolio so in the future I can pay a couple of properties off, buy my principal place with cash. You don't need to buy in Sydney and Melbourne. The suburb that I'm telling you right now is probably one of 20 or 25 that we've bought in over the last year. We're not buying here anymore, but if you want huge growth, this is where to get it, right? And all the data, even things like building approvals, even things like developable land schemes, like job advertisement trends, I'm telling you the data factors here. Things like average incomes increasing, things like the percent of professionals in the area, all of this stuff is lining up to be fairly strong. And if you want to make $100,000 quick time, Highland Park in Queensland is the area that you may want to consider, right? Don't buy in Brisbane just because it's a capital city. Like, you know, I grew up in New Zealand and there was really only one or two capital cities, Auckland and Wellington. They haven't really outperformed other areas, right? Yes, sometimes people say Auckland prices have shot up. I used to live in Napier. Back then in Napier, you could get, where we were living, probably a house for about $300,000. This, I'm talking like, 15 years ago. Now those same houses are, close to $1 million, right? So that percentage growth is basically very similar to what Auckland has experienced. The point is that regardless of where you're looking in New Zealand or Australia or other, Western developed countries, there is not a huge difference in price growth in regional areas versus capital cities. That's for another video, but I just want to hit home the point that if you're thinking, oh, look, I only want to buy in Sydney, Melbourne, or maybe Brisbane, I don't want to buy in the Gold Coast because it's small. Like, that simply means, without me being rude, it simply means you don't know enough about property investing. Look at the data for the last 30 years. I can tell you that Sydney, Melbourne, Brisbane, Hobart, Adelaide, Perth, Gold Coast, Bendigo, Ballarat, Newcastle, Wollongong, etc., all these areas have grown by basically between 6 to 7%, or basically between 5.5% to 6.5%. There's not a huge difference, right? The point or the name of the game is to get quick equity. We want that price jump in the next year, 2, 3 years, take that equity out, buy more properties. So guys, hopefully that's been super useful. Now, if you want more of these videos, tell me. There's only one way that inspires me, because I know that there's reciprocation. If you're on YouTube, smash the subscribe button, ring the little notification bell once you've subscribed, hit the thumbs up. That way this video goes to more people. Like, this is value, right? Like, this isn't fluff. I'm telling you an exact suburb. I can tell you no buyer's agent are doing these videos. I can tell you not even on podcasts do they tell you exactly where they buy, because there is lack of accountability in the real estate sector. There is no accountability, no trust, no discipline and authenticity in Australia in the property market. Everyone's an expert. Everyone's trying to sell you something. No one puts their reputation on the line and actually gives you real answers, not just the fluff, the high level stuff. I can't tell you how many people message me and say, I've listened to 1,000 Empower Wealth Property Couch podcasts. That's exaggeration. I've listened to the Smart Property Investment Show 1 million times. And yes, it's helped, don't get me wrong, but I still don't really know what I'm doing, right? You need more content that is more deep, more specific, more real. So if this was helpful, if you're watching on YouTube, hit subscribe. On Facebook, tag the people that need to hear this. Give it a like, give it a love, comment, tell me what you think about it. And across the platforms, I'll leave a link below so you can find out how to do exactly this and be a Bennett by buying properties that will build you a passive income, buying properties that have a combination of growth and positive cash flow without dropping 15K on a buyer's agent, without spending months researching, and without wasting your weekends doing inspections or flying around the country. My name's PK. Peace and good luck.